Really cool thing. On Fridays, I do trade reviews. That's what today is, Friday. Therefore, I chose a trade review from out there on the real life trading community to talk about, discuss, analyze, break down, and segment about what we could have done good, better, great, bad, and all in between. Hope you enjoy this trade review.
It's time for the trade review, so let's get into it. This is a trade that my great friend, John Salvio, in Astoria, New York, played today for a win. Why did he play ENPH Energy? Well, number one, because this is a stock he's been following kind of religiously for the last few weeks. This is a stock that has very, very good fundamentals. And full disclosure, John's one of the traders and investors who let me know about this company back in February 2019. So thanks for that, John. Secondly, really nice double bottom that is coming here. One white soldier from the heavens on April 6th. And if you were thinking, oh, well, I don't know how to play that one, you got another one on April 14th. And then you got another new white soldier on the 22nd. And then you got another one white soldier, new white soldier on the 28th. So many bullish opportunities to get on this thing and just screaming at your face, please buy me ENPH Energy. Let's go look at how John Salvio played this one today. Here's the trade setup. And this is on a 5-minute chart. So what it looks like to me is John was playing it bullish, as it says bullish limit buy. And he waited for the stock to run up. So here's the run up in the morning. And he was getting in on the pullback is my assumption. So when this pullback is actually coming in, he bought here where they stopped down here. Now the other possibility is he waited for the second rotation to come in to prove that it really wants to S-curve, had a very obvious pivot in and bought that dip. The price that I actually really like that he's buying, as you'll notice, is at this resistance here. This is a previous resistance. What resistance is it? Shocker. High of the day from yesterday. So let's go into ENPH Energy and look at it on a 5-minute chart and just kind of see how I would have played it as realistic as I can. I did not take this trade, although we did have a nice winning day on the day. And here's the first 5-minute run up. So you had this really nice bearish candle. And again, I'm not saying that I would have traded this, but generally when I play continuation being really good trend, it's kind of a no-brainer. It's pretty obvious. Strong bearish candle out the gate, gap up, and then inside candle. So this is like a morning star reversal. So my entry would have been here with a stop down here if I was watching it this morning. I wasn't, so I didn't play that. But that's how I would have played it. Once that morning star reversal comes in, once your bullish candle, one white soldier candle comes in, a little bit of a hammer, very, very nice hammer candle. That's how I would have played it personally this morning. But again, did not. So once the stock is coming up in here and really makes that beautiful, beautiful move, strong run up higher, I would have most likely played the S-curve. You have a very strong bullish candle here with large volume. So that says to me, yep, wait for the retracement. And the retracement would have been the resistance, old resistance, new support here on the ENPH at the previous high of the day. So this previous high of the day is 57.70. So that's where I would have bought it, pretty much halfway into this candle. And my stop loss would have been down here where this black line is at approximately 56.40. So entry 57.70, stop loss below this pivot right here, right around 56.40 and some change. And I would have had to hold through some retracement, would have kind of been sad about this. But once this little pop comes in here, once that move comes in there, then I would take my stop up, increase it to 56.66, 56.66, or right below this pivot. And when this S-curve comes in, this little retracement, right? When that one comes in, I'm kind of thinking to myself, all right, well, this is probably not going to work that great. Tweezer bottom comes in, morning star, a little bit of a bounce, and then as of 11:55, I would increase my stop and put it below this candle. So my stop loss would be here at 56.81. And yep, I would have exited some at this high, 58.26. I'd still be in with the market having an hour and a half left until close. My stop loss would be at 57.50. Which would more or less guarantee me a very small one in the trade. Probably would have exited half or a quarter and then just trailing the rest to see if we get a little bit of a breakout and just a continuation move higher. So looking at John, yep, look at that. Exited half. Stop's going to be at cost, he said, which is break even. And from here, he's just going to trail and see what happens. Good stuff. I like it. I dig it. Well done. Well set up. Well played. Great trade, John Salvio. You are the man. Camera guy, let's take this away.
Okay, that was your Friday trade review. Thank you for watching. You are a majestically marvelous human being. I'll see you later. Bye.